I don't know why my pictures aren't showing up here.
Let's put that in there too.
It's a bunch of happy people. They're very rarely happy. We wanted to kick it off and talk about how to prepare for a loan application. As easy as this might seem, it's probably one of the most difficult things we as lenders or even real estate professionals have to, I don't know what word I'm looking for. We have to spend a lot of time on it up front, because if we miss things, then it could create a process that's an absolute nightmare. And so the key to a successful real estate transaction is preparing yourself, taking the time to have everything put together up front. We've broken it down to 4 easy categories, okay? Acid. And you look and you think, acid's gonna burn me? Well, the loan process will burn you if you don't have it in order and set up straight. You don't need to have your contract. You don't need to have every single duck in a row initially up front. But you do need 4 components that make up acid. You do need to have that, which is your assets, it is your credit, it's your income, and your down payment. And within each category, it's best to not have moving parts and pieces within each category. I don't know how many times we hear it from clients that they're upset or frustrated with documentation being asked for once, twice, 3, 4, 5 times. There's a huge misunderstanding of what lenders are required to look for when qualifying you for a mortgage loan. So ACID, your assets. We want to make sure you've got all your bank statements, your retirement accounts, your CDs, 401ks, all the money that's going to be used for the purchase of your home is documented properly. Then you're going to have your credit. And in your credit, that is your that's your history of how well do you pay people back. So, you know, we have lots of challenges with credit where you've got collections or disputes, or, you know, you're maxed out on your credit card, or you co-signed on a loan for somebody, or you didn't pay your child support, or whatever. That's your history of how you treat other people or entities when they loan you money. So when you're obtaining a mortgage loan, that's really important that we look through that and we make sure that we have 100% of any and all documentation that either supports what that credit report reads one way or another. And then the third piece is income. And with the income, I gotta say up front, and we've talked about this before, you gotta keep still with your income. You can't change jobs. We wanna know how long have you been at your current employer, what type of pay you get, whether you're a salaried employee, you're on commissions, do you have bonuses, are you self-employed? There's all types of documentation requirements around the income. And so in order to determine what documentation is needed, we have to first identify what it is you do for a living and how you get paid. It's really important. So we've got to tackle that. And then down payment. How much skin in the game are you putting into the purchase of this house? Are you doing 100% financing? If you're doing 100% financing, ask yourself this question. When I'm going to talk to a lender, I'm asking that lender to loan me money because I don't have it. So you don't have any money, you want to do 100% financing, so you're going to have certain documentation requirements, you're going to have certain credit requirements, you're going to have certain asset requirements, which is fine, but I think that a lot of times people kind of show up and they think, oh, I want 100% financing, I've got no money to purchase this house, and like they look at banks as you're in my way of purchasing this house. And I'm totally entitled to this house. And that's not the case. You need the money, so follow the rules and follow the people that are trying to get you into the home. So the down payment is huge. It also is the appraisal. We look at the down payment in that category. We look at the appraisal because it shows what's the value of the home. If you were putting a certain amount of money down or you were doing 100% financing and the house came under value, well, then there's that shortage between the purchase price and what the appraised value is of the house. And so we need to address that. But up front for getting pre-qualified, preparing for a mortgage loan, we want to break it into 4 simple categories: your assets, your credit, your income, and your down payment. So your assets, get 30 days worth of bank statements and 401ks and all your savings, whether you have CDs or IRAs, whatever you got, get it together. And then your credit, the lender will pull your credit, but you could be required to submit additional documentation if there's stuff on the credit. And then your income. Income, think of this, just 2 current pay stubs, 2 current W-2s, and 2 current tax returns. And so that's how we document the income. Now there could be additional stuff on the documentation that you submit, but we'll cross that bridge when we get there. So the last 4th piece is the down payment. Are you gonna put money down? Are you saving money to put down? Are you gonna do 100% financing? What is it that you want to do so then we can structure the loan around that scenario? But if you focus on those 4 things, and before you go out and look at a home, if you put a little folder together of those things up front, it's going to make your process a whole lot easier, because once you identify a home, it's like getting on a slip and slide and spraying detergent all over it. You're going to just get on it and go, and before you know it, you're at the end, and you're like, wait a minute, how did I even get here? And you're going to have stuff that's missing. You're going to think it's the lender's fault, it's the realtor's, it's going to be everybody's fault but your own for not being prepared properly for a loan application. That's all I got.